Right now, in banks all over the world, money is being created, not printed, not mined. Typed, a number entered into a database, and suddenly it exists, backed by nothing but a promise to pay it back, with interest. This isn't a conspiracy theory. It's how the modern banking system officially says it works. The real question is, what does that mean for the people who owe it? To understand modern banking, go back to 17th century London. Goldsmiths had strong vaults, so people paid them to store gold coins. In return, the goldsmith issued a paper receipt. Merchants started trading those receipts instead of hauling gold around town. And the goldsmiths noticed something. Depositors almost never showed up all at once demanding their gold back. So they started doing something clever. And depending on who you ask, either brilliant or dishonest. They issued more receipts than they had gold in the vault and lent the difference out for interest. That's the seed of fractional reserve banking. If it worked, everyone profited. If too many depositors got nervous at once and asked for their gold, the whole thing collapsed. That pattern, confidence propping up a promise. In 1694, England was broke from war with France. A group of private financiers offered the Crown a deal. Lend the government £1.2 million, and in exchange, let us found a bank with the right to issue notes against that debt. That institution became the Bank of England. And it set the template every central bank since has followed. The government's debt became the foundation of the nation's money supply. The state didn't just borrow money, it helped invent the system that created it. 2 centuries later, the United States built its own version. After a string of financial panics, a small group of the country's most powerful bankers met in secret in 1910 on Jekyll Island, Georgia, to draft what would become the Federal Reserve Act. Secret meeting, disguised names, private train car. It sounds like fiction. It isn't. It's documented history. In 1913, the Federal Reserve was born, a private-public hybrid, owned in part by member banks, tasked with controlling the nation's money. Here's the part most people never get taught in school. Most of us assume banks lend out money that other people deposited. That's not how it works. When a bank approves your loan, it doesn't reach into a vault. It creates a new deposit in your account, new money, out of nothing but your signature, and its confidence you'll repay. The Bank of England admitted this outright in a 2014 paper. Commercial banks create the vast majority of money in modern economies, simply by making loans. Banks do still hold reserves and are bound by capital requirements. They can't lend infinitely. But the core mechanism is real. Debt is the engine of the money supply. Almost every dollar, euro, or pound in circulation exists because someone, somewhere, is paying it back with interest. Which raises an uncomfortable question. If the principal is created but the interest isn't, where does the money to pay the interest come from? The mainstream answer: new loans. New economic activity, new money entering the system keeps it solvent. The critics answer: it means the system requires perpetual growth and perpetual borrowing just to keep from collapsing. A treadmill nobody agreed to get on. When the system works, everyone benefits. Credit funds homes, businesses, education, but the design has a built-in asymmetry. Banks take on relatively little risk creating a loan, while borrowers carry the full weight of repayment, interest, and, if they default, the loss of collateral. And when the system breaks, as it did in 2008, the pattern repeats. Losses got socialized. Governments and central banks bailed out the very institutions whose lending practices caused the crisis, while millions of ordinary borrowers lost homes and savings. Economists call it moral hazard. When an institution knows it will be rescued if it fails, it has every incentive to take bigger risks. Critics call it something blunter, a system where profits are private and losses are public. That's not a fringe claim. It's a mainstream critique made by Nobel-winning economists, central bankers, and financial journalists alike. Now, this is where the story splits. The documented history above is just that, documented. but it's also fertile ground for theories that go much further. Some claim the entire system was designed from the start as a deliberate, coordinated plan to trap ordinary people in permanent debt, not an emergent side effect of how credit works, but the actual goal. Others go further still, claiming a small, hidden group secretly controls the world's money supply, and, by extension, its governments. It's worth being honest with you here. Those broader claims aren't something historians or economists can verify. The documented mechanics, fractional reserve banking, debt-based money creation, moral hazard, bailouts, are real and well-sourced. The leap to it was all planned by a hidden hand to enslave humanity is a much bigger claim, and it isn't backed by the same kind of evidence. It's also worth flagging that some versions of this theory, going back a century, target specific ethnic or religious groups, most infamously, anti-Semitic myths about Jewish bankers secretly running the world. Those aren't just unproven. They're a well-documented form of hate propaganda that's been used to justify real violence. So where does that leave us? With a system that is, by its own official design, debt-based, opaque to most of the public, and structurally tilted toward those who create credit rather than those who borrow it. You don't need a secret cabal for that to be worth questioning. The receipts are already public. Whether you see this as ingenious financial engineering or a slow-motion trap depends on where you're standing, a shareholder or a borrower. What's certain is this: the Goldsmith's trick never really ended. It just got a computer terminal instead of a vault. History changes. Human patterns remain. If you enjoyed this investigation, subscribe for more mysteries, conspiracies, history, and unexplained stories. Until then, stay curious,